welcome to another Smaulgld live stream. It is the 20th of October 2019 and it is Sunday, so it is Solid Gold Sunday with Smaulgld. Last night we missed Saturday night silver with Smaulgld, but don't worry, we're going to catch up on both gold and silver. Tonight we'll start with silver. We've got some silver stories, some gold stories, and we also have a lot of charts to get through. And tonight's topic, however, according to the headline, is Kazakhstan's gold tops 66% of its reserves. But we're going to get into what all that means as well. So let's take a look at Kazakhstan first, because many people come here, they see the title, they don't hear what they want right away, then they click off and they go away. So let's satisfy the people who are interested in Kazakhstan and its gold reserves and the addition of lots of gold to her reserves over the last 6 years. We're going to take a look at that right now. So Kazakhstan is now a major gold producer, has cracked the top 10, and well, let's see where Kazakhstan is right now in terms of all other central banks. Well, look at that. Kazakhstan is 13th with 378 tons. That puts it just behind Portugal at 382 tons. Now, Kazakhstan, according to my notes here, a quick math, is adding this year about 3.4 tons a month. Last year they added about 4.2 tons a month, but point being is they will soon pass Portugal and then head towards Taiwan and the ECB. Taiwan, I think, is 423 tons. So Kazakhstan is going to break into the top 10 gold holding nations. This chart will be filled out with the numbers and the Smaulgld logo and put on smaulgld.com either later tonight or tomorrow. So you can always get the full charts on smaulgld.com. I tried to fill them in tonight. I didn't manage to get it done in time. But let's look at Kazakhstan's big gold push and what they've been doing. Same with this chart. I didn't fill it in, but you can get the idea here what's going on. Back in July of 2015, well, you could see they didn't have that much gold. They had about 240 tons and now 198 tons in June of 2015. This starts at July 2015. And right now, they are at 378 tons. And they did this by adding gold pretty much each and every month for about 80 some odd months. Last month that they reported in July, and we didn't note this yet, they actually sold off about 2.3, 2.4 tons of gold. They added back that and more in August. They added back about 4 tons of gold. But you could see they're still at an all-time high, 378 378 tons of gold. Now, you would think, country that's piling on the gold. Well, first of all, where do they get that gold? Well, you could see they've become a big gold mining country, pretty much doubling their gold production over the past few years from 40 tons to 85 tons. And that chart will also be on smaulgld.com. But let's go back to the top 20 again of the gold holding nations. I want to show you another country that's very similarly situated geographically and in terms of gold holdings is Uzbekistan. So the stands are on their way up. Uzbekistan has about 340 tons of gold. They are also a recent entrant into the top 20. They have 340 tons, Kazakhstan 378. Both of having recently passed Saudi Arabia and the United Kingdom. And Uzbekistan is similar also in that it is also building its gold mining capacity, and along with it, its gold its gold reserve holdings. Now, all of this gold buying, what has it done for Kazakhstan? Well, they now have $18 billion worth of gold. That's a good thing, as Bernie would say. It's a very good thing. $18 billion worth of gold. They have $28 billion worth of reserves. They now, when we started covering Kazakhstan, they used to have 30-40% of their reserves in gold. Now, about 66 2% of 2/3 of their reserves are in the form of the yellow metal. You would think holding all that gold might be good for the Kazakhstan tenge. No way, Jose, it is not. Hasn't helped, hasn't hurt, but you can see the price of gold. And you can see why they probably add it, because their currency is depreciating. So there's no reason to hold on to Kazakhstan tenge. They might as well add the gold. I mean, they got it. It's in their backyard. They might as well pile it into their reserves on their central bank. Russia's doing the same thing. Russia's actually mines more gold and adds more gold as a percentage of their mining production. They add about 65% of their gold to reserves, whereas Kazakhstan is adding about 60% of their mined gold to reserves. I guess Kazakhstan gold mining production companies, they need to make a living too, so they probably sell some elsewhere as well. But you can see here that gold in Kazakhstan tenge has been a good insurance against their own currency, because the price of gold has gone up threefold since 2015. And this isn't a recent phenomenon. This chart here that you're looking at starts in 2015, but we can go way back in time, 20 years ago on Nick's charts, and then you could see it's just a 12-13% increase over the last 20 years or so. So Kazakhstan holding gold, that's a good thing, and that is true, but it's not helping their currency. A lot of people think that Russia is adding gold and it's going to be gold-backed ruble. No, it helps their reserves. It's not going to back any ruble with gold. They may trade in certain circumstances with gold, but again, why would any country want to trade gold unless they absolutely had to? I mean, it's common knowledge that you hold on to the good currency and you ditch your bad currency, and that goes for spending. That's why I don't understand this whole push to try to make gold spendable by putting it on the blockchain. Who would want to spend it? You'd want to spend your fiat currency. In fact, think of how little sense that makes. You have fiat currency, so you buy gold. And then you're going to want to spend the gold that you just converted from fiat into gold? No. If you have anything to buy, you would use your dollars. The only reason you would spend your gold, at least the way, if you're thinking rationally, is you don't have the dollars to spend. So you need to spend the gold. And I suppose in that instance, it's a convenience. But, all right, let's move on now from Kazakhstan and do some more what's going on in gold. First, let's look at the price. The price of gold over the last year, we're kind of fading a bit here. We didn't hold the $1,500 mark. Remember, my prediction at the beginning of the year was if gold kept rising, got past that $1,375 mark, which it did in, it looks like in July, at the end of June, that it would probably shoot up to $1,400 and after that to $1,500. And then the wild card was, could it get to $1,600? And I said if it did, then silver would really pick up and silver would get over $20. Silver did get to $19.50 when gold got up to about $15.50. But as we see all the time, the rise, the fall in silver is usually greater than the fall in gold. While gold has drifted lower, it hasn't really fallen, but silver has not done as well. Let's take a look at the silver price. You could see the 1-year silver price did that nice run up to $19.50, as you can see in the chart, but it's fallen $2, and that's not very good. You can see it goes up faster, but then it also falls faster. And what does that do for your gold-silver ratio? Well, it was as high as 93, 94. Remember, the unsustainable gold-silver ratio should be 7-to-1. All this nonsense about how much it comes out of the ground and relative rarity. And anyway, we've discussed that so many times, and it's trying to go back and look at some of the other videos. We're not going to get into that now, but you can see that the gold-silver ratio is still in the mid-80s, and that will not go down unless gold really takes off a bit more and silver starts to follow, and then it will go down. And you see it did go down to below 80 during the period of time when silver was rising and gold was also rising. So for the gold-silver ratio to come down, both have to be rising, and when they are both rising, you will see that gold will rise at a lower rate than silver. But sometimes gold plods along, trudges along, goes up a little bit, and silver doesn't. And that's a shut that dog out. That is a hallmark of the price. And then when gold drops, you can bet silver's going to fall a lot more. That's how it's been. Now, the only way that's going to change, I believe, is if silver has some other catalyst to drive. But if it's going to catch its upward draft based on some type of monetary or insurance, it's going to have to, it's going to be because gold is doing the same thing. However, if silver somehow can catch a commodity bid, meaning that there's some type of shortage, which there doesn't seem to be. You hear all the silver pumpers telling you for the last 10 years, silver shortage, silver's going extinct and all that other nonsense. But unless there is a major surge in silver industrial demand, you're not going to see silver rise because of its industrial component. You're going to see it rise if there is a monetary surge in gold, which will usually translates into some attention, some dollars, some fiat being pushed into silver, at least on the trading side, and that drives silver higher. All right, let's move on now. We got to continue with our silver stories. What else happened in silver? Silver ETFs. We should take a look at silver ETFs. They're still heading higher in terms of added ounces, but it has slowed down, but we're still way up near the record high of about 700 million ounces in all the ETFs. And then when you add in not just ETFs, but things like gold money and bullion vault and Perth Mint storage, other storage solutions, and the Comex vaults, you see that silver is on the up and up still. But again, the rate of increase the last 4 weeks is slowed to just about 0.5%. But the SLV still growing, 1.45%. It's at a record high of 381 million ounces. The Comex vaults lost just a little bit over the last 4 weeks, but are still up significantly. Now let's just take a look at the chart. Again, all these charts will be on smaulgld.com. You can check them out there. Make sure you subscribe there so that you receive the notifications and the updates, because you don't always get them on YouTube. You will get them on BitChute. If you subscribe on BitChute, you'll get the updates. You will clearly get the updates from smaulgld.com. YouTube, if you just happen to be passing by now and watching this, make sure you subscribe to Smaulgld. Or even if you think you come here every night, you might miss some broadcasts. You have to check YouTube like a hawk and just check in every night around 7 o'clock to see if there's a podcast going on. And generally there is, although we're going to have to talk later in the program about some changes in the schedule. But for now, make sure you tune in every night and see if there's something there. The easier way is just to subscribe to smaulgld.com and BitChute, because currently I now have it set so that when a live stream ends, it automatically gets uploaded to BitChute within a matter of minutes. So that you will get the notification on that. So if you missed a live stream, instead of trying to find it on YouTube, you'll get a notification on BitChute if you click the bell over there. And then usually the next day I post on Smaulgld, which includes all of these charts. And here is a chart with the amount of silver ounces held in all these custodial arrangements that we were just showing you. And the value, though, isn't as high as it used to be, but it is an all-time high. 1.142 billion ounces of silver, identifiable and locatable. So this is, a lot of people say there are no silver stockpiles. No, there are. There's at least, and then we know millions and there's billions of ounces elsewhere in people's sock drawers and in silverware and jewelry. But this is an investable silver. This is silver they can account for that's being held specifically as an investment. Good portion of that is Comex silver that's in eligible form, 1,000 ounce bars. All right, silver news. Now, we talked about this as well. We predicted this would happen, that if the price of gold kept going higher and silver lagged, well, then Indians would do the smart thing, at least economically smart. They'd hold off on their gold purchases and they'd switch into silver. And it looks like Bloomberg's finally caught on to that trend. And it says here, silver glitters in India as record prices dull gold's luster. I mean, they're still around 1,500. And in Indian rupee, that is somewhat of a record. So let's take a look at the gold price and the silver price in Indian rupee. And then we're going to take a look at the imports of both metals into India. So here's the gold price in Indian rupee. And you can see in September it was not a good buy. Now the prices come down a bit in Indian rupee, but you can see from June to September it was getting increasingly more expensive, far more expensive. I mean, this is not the increase we saw in the US dollar in gold. I mean, it went from 1,400 to 1,500, but here you're looking at a gold increase price from about 100 and up to 111,000 rupee, starting from around 88,000 rupee. So that is a 23,000 rupee increase, which amounts to a 26% rise in the price of gold in just 3-4 months. So I have no idea where I got cut off on this one. Anyone help me out with the last time you heard me speaking? In any event, I was talking about gold price in Indian rupee and silver price in Indian rupee, and I'm not quite sure when. I just noticed that YouTube cut me off again. Philip Quinn not being notified. Well, that means that you did hear a good part of this. But somebody let me know at the if you remember getting cut off, or if you even hear me now, when YouTube cut me off, because I noticed that I have been cut off. I was talking about the price of gold in Indian rupee versus the price of silver in Indian rupee, and the point being is that the gold had risen very fast, 26% versus the Indian rupee in like 3 or 4 months, and also was at a record high in Indian rupee. Whereas right now, even though the price of silver rose this year a good percentage in Indian rupee, it's still not near its all-time high. So, purpose of the article, it was saying was that Indians are turning to silver, and I have the charts now to show you that is indeed the case. Let's see where we are with the silver news. Here is the gold imports, and you can see India imports a good portion of its gold. Okay, so Phil says we're cut off for a minute. That's good. That's not too bad. Okay, so the Indian gold imports, you can see in June is when the big rise started in the price, and now we're down to really slashing those imports. Now, the imports are very important for gauging Indian gold demand, because India has no domestic gold mining production, so either they have to meet their demand from what's already in the country, or new demand has to come from imports. So you can see a big dramatic drop off. Now, silver is having a very good year. Gold was having a very good year, and import-wise, but you can see there the Indian gold now year over year. Last August they did 96 tons, and this August only 28 tons. Now, if you go over to silver, it's a different story. This August they did 503 tons, and last August they did 325 tons. And while August was lower than June and July, as you saw in July for gold, was on a decline, and you can see in July for silver, it's a massive month, 1,041 tons. So clearly there is a shift from gold to silver going on in India. All right, let's move over now to gold. And we're talking about gold priced in foreign currencies. We looked at the gold price in US dollar, and we did gold in Indian rupee. Let's just take a look at two other currencies. We can't do them all. Sometimes, you go to Smaulgld.com, I'll have the charts up. But here's gold in Turkish lira. Now, there's a country where you're going to want to not save your money in lira. Clearly, over the last few years, the gold price has more than doubled. As you can see from the chart here, 4,500 Turkish lira, and now costing you about 8,600. Big increase in the price of gold in Turkish lira. Not going to get into all the geopolitical reasons why, but you can guess. Now, Swiss francs, traditionally a very strong currency, considered a safe haven. But over the last, it used to be actually backed by gold to a certain extent. They sold over half their gold, 60%, to get into the IMF, and now they've been trying very hard to kind of keep a peg close to the euro. They don't want their currency to get too strong, and so they go buying whatever they can buy in stock markets and print up money. Problem with that strategy is they buy what you might think are not good stocks to buy, like they'll buy unicorn stocks. Unfortunately for them, if they're trying to lower the value of their balance sheet, they go up and they make a huge profit buying stocks. So I guess it's good for the U.S. stock market to have foreign central banks buying U.S. shares on NASDAQ, and not just, AT&T and dividend stocks, but they have things like Zillow and Tesla. They have a bunch of unicorns. One time a couple of years ago, I did a entire video on the holdings, and they're still pretty much the same, in the Swiss National Bank, and the type of, you would not consider investment quality shares, but they have over $1 billion, I believe. They have Apple. They also have some blue chips too, but the fact that a central bank just goes into the U.S. stock market and buys shares, you used to think of banks holding gold and currencies, and now they hold stocks. In Japan, the Bank of Japan owns ETFs, so it is quite crazy what they do. All right, and that's gold versus foreign currencies. What else do we got for gold? Oh, we got to look at the Dow gold ratio. That's another indicator we like to look at here, and you can see that the Dow is about 18-1. Still high. Now, the reason it's high is because even though gold has made a nice run, the stock market doesn't seem to want to quit, and obviously money being thrown at it. And I mean, right now we've got the repo is irrelevant to the stock price, other than to keep the interest rates low. So I suppose it is supportive, but it's not the same as just printing up money and buying outright the treasuries. But don't worry about that. They're doing that too. They announced $60 billion in additional purchases, not repo. The difference between the repo and the purchases, which they're calling not QE, which technically it's not, but it's irrelevant what you call it. What they're doing is what's important. So briefly, we'll just go through that. The repo is not really adding much to the balance sheet to the extent that they're doing the overnight repos, because all that involves is taking the collateral in the form of U.S. Treasuries, agency debt, or agency mortgage-backed securities, not any old mortgage-backed security. All this nonsense here about pawn shop, that's just gibberish. So they're taking what you would call good collateral overnight, and they're lending the money. That doesn't stay on the balance sheet because it's a wash. It washes out the next day. What does stay on the balance sheet for the repo are the term purchase agreements, which most people just talk about the repo as an overnight thing. That's where the stress was initially, but they're also allowing, with the same collateral, the treasuries, the agency debt, and the agency mortgage-backed securities, which are guaranteed by the U.S. government. That's why they're considered good collateral, because the U.S., if the U.S. backs something, well, then they consider that as good as gold. Don't ask me. Well, they do. But the repurchase agreements, if they're 14 days long, that will stay on the balance sheet. And we've shown this. Go back and look at the other videos we've done on this. On the balance sheet, that shows up under repurchase agreements, a separate line item that adds to the Fed's balance sheet. It doesn't show up anywhere else, but it shows up in that special line item. But now, so that's repo. That isn't QE. It is the Fed intervening. I don't know why people get all exercised about what you call it. You either get exercised about what they're doing, but not what they call it. That one I don't worry about what they're doing, because I view that, if you go back and do the damn Fed analogy, I view that as if the Fed is going to create all these artificial interventions in the first place in the financial system, and they're trying to manipulate interest rates, well, that's is what they have to do. It's not whether it's a good thing or a bad thing. To me, it's par for the course. When you have intervention, you have to do more intervention. So that's what they have to do there. If you're trying to set interest rates at a certain price, how else are you going to do it? If you can't just say we want interest rates to be 2%, market says we don't have the money at 2% to be lending overnight. We'll charge 10%. And if it says, no, you won't, we'll make sure that it's 2%. So we'll put the money up. You give us the collateral, we'll put the cash up. That's all that is. That's not QE. It's intervention for sure, but it doesn't mean there's a recession. It just means the Fed has created this system where we have this massive demand for dollars. Why? Because we're on a debt-based system. And when you have debt-based systems that are based on the US dollar, everyone and their mother borrows money in US dollars, which means they need dollars to pay back their loans. And there aren't enough dollars. This is the imbalance that's been created by artificially low interest rates, by QE. So, and if you're they've already done this. This is the point Peter Schiff used to make all the time. You can't just stop QE. He used to have this analogy 4 or 5 years ago that it's not just the musician pulling the tablecloth and leaving the cutlery there. It's pulling the whole table out. And so this is why this has been expected. So when the Fed says they expected this to happen, that they'd have to do this, it was, all right, they don't believe it. Of course they knew this was going to happen. They're the ones who built the dam, and they're the ones who are maintaining the dam. And again, this doesn't mean this is good. It just means if this is what's happening. So that's the repo. The second thing is now the short-term purchases. Well, that's QE. Well, not really. And again, it doesn't matter what you call it. These purchases are purchases. They're not loans, short-term or overnight loans to the banks. They're just going to buy U.S. Treasury securities, $60 billion a month. That's a large amount. That's QE size. But again, it's for a different reason. They're trying to keep the interest rates low. So they're buying the U.S. Treasuries, but they're short-term Treasuries. They're not the long-term ones. Less than a year. Again, Fed, this is their game. They've printed up the money. They've done QE. They've encouraged other central banks to do QE. Other central banks have brought their interest rates down to 0 or below. The whole system is based on borrow, 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 lower rates, encourage borrow, drive asset prices up. And the only way you can keep that that's an artificial system. Negative interest rates. That doesn't make a stitch of sense. There's no such thing in a natural system as negative interest rates. Hey, I'm going to pay you to borrow money. I'm going to give you some money. Don't worry. I mean, it makes no sense, negative interest rates. And that's what they have created. So, of course, the whole system is screwed up and they have to go in and do all this money printing just to keep money in the system. All right, so that's what they're doing now. Repo, which involves overnight loans for 3 types of collateral, agency debt, agency mortgage-backed securities and U.S. Treasuries, and term repurchase agreements of 14 days. That's the repo market. And then the other is the $60 billion a month bond buying. Both of these programs going into next year. And don't be surprised if they have to keep doing them. It's not going to change the nature of it. It'll just mean in their judgment, this is what they have to do to keep printing the money. All right. Let's move on now and see what else we have in the gold. Comex gold. Let's take a look at the Comex gold. Yeah, Comex gold is the only big difference going on at the Comex is more and more gold is finally being registered. There's been a lot of gold in the Comex, as you can see. Always over 6 million ounces the last few years, up to about 12 million ounces. The real issue has been, and I'll show you another chart, it's a bit easier to see, is in the registered amount. Here you can see at one point there was only like 140,000 ounces available to be delivered because the wasn't registered. But now you see they're over 1.15 million ounces. Still a relatively small amount, but you can see there's a big increase. which probably means people are going to sell, so they got to get it ready. They're ready to let somebody take delivery of that gold. The silver story is a little different. Lots of silver being added still. We're almost at 315 million ounces of silver held in the Comex depositories. Good portion of that is registered, 240 million. No, I'm sorry, 82 million. 240 million are not registered, and 82 million are registered and good to go for delivery. JP Morgan, the largest depository of silver at the Comex warehouses, almost 160 million ounces now. Most of that is not registered. You can see 4.7 million only registered, but there's lots of silver. That's about half the silver, and here are the other silver warehouses. Brinks being the second largest with about 51 million. Coins and Things also about 50 million. And then HSBC, who's the largest holder of gold at the Comex. They got about 6 million of the 8 or 9 million ounces over there. They're about 28 million, and then you go down to about 15 million each at Delaware Depository Company and Scotia Makata. And let's see if we got anything else for you tonight in the gold and silver stories. We've done Kazakhstan. And, one story. This is just the state of things. Check out this story. Now we're going to get to your comments. Check out this story. BBC News. LIBOR rigging inquiry shut down by the Serious Fraud Office. Now check out the story here. This is from the BBC. An investigation into the rigging of LIBOR, the benchmark interest rate, has been unexpectedly closed. The decision comes despite ample evidence that implicates the Bank of England. Means now no one in the UK will be prosecuted for lowballing the LIBOR rate. The Serious Fraud Office said its decision followed a detailed review of the evidence. So that's it. No one's going to jail. No, Bank of England, they're not going to go after the Bank of England. I then put out that, well, that's the Serious Fraud Office that says that they are not going to prosecute. But don't worry, the LIBOR rigging inquiry has been referred to the really Serious Fraud Office. No, I don't think so. So, again, I do a lot of studying of different disciplines on the side, and one of them is on the rule of law versus the rule of men. And one of the problems with the rule of men is it leads people to believe that not to have faith in their institutions if people in high positions of power are not treated the same way as anyone else. Now, first of all, you and I cannot rig the LIBOR rate. And if we did, somehow, you would go to jail and you would pay a fine. But when the Bank of England rigs it, and there's ample evidence that they do, the Serious Fraud Office says, oh, well, what do you want? What do you want us to do? There's nothing we can do about it. Sorry, go on. And that's the end of the story. So this is an issue you're seeing in the Western world, where it's the rule of men versus the rule of law, or, as they might say in Canada, the rule of no gender versus the rule of law. All right, let's now move on. I think that's it. So let's check out your comments, see what you're saying. Sorry for the little interference that we had. I thought I was watching closely, and I didn't catch how long I had been off. But again, that is I must have, because I mentioned BitChute, and that must have done it, and they must have said, okay, we're out of here. You can't mention BitChute. As we noted the other night, I was telling people to subscribe to Smaulgld, ring the bell on BitChute, and then boom, off we go. And this has been typical on YouTube, as I get cut off all the time. Maybe I just got cut off again. I'm looking for something, so we'll see if I'm still up on let's see where we are. I gotta check the numbers. I mean, the screen shows me when I'm still online and when I've been cut off, and I can't really see it right now because I'm looking for something else. That's all right. If I've been cut off, I've been cut off. Wouldn't be the first time. All right, let's see what you all are saying in the comments section. While I put up what I was looking for was this. This is the Very, very poor month for Smaulgld. Not looking good for donations. I think I got one very nice donation, the gems and the amber, and that was it. And actually lost a Smaulgld patron. Didn't gain any this month. I think I gained one. I don't know if it was, might have been last month. I think it was last month. But the Smaulgld patron was only with us for less than a month, but that person was particularly perturbed at the mockery that I did of the whole repo thing, and I thought that they gave me a list of things that I should be discussing instead, and I said send money, and he canceled his patron. So I think I made $2 there, and they wanted me to work and do stuff. And by the way, I mean, since it's very simple, since this is not a big profit center, there's no way, no how that I'm going to change how I cover things. I mean, I'm welcome. I'm open to hearing suggestions, but I'm not going to stop doing something because somebody who's been a subscriber for 3 weeks decides that I shouldn't be. I mean, then he hasn't been listening long enough, because I do this to get across my point of view, not to make $112 a month. All right. It'd be nice if I could make more, but I still wouldn't change. But the people that are paying the $112 a month are the people that I presume like the Smaulgld type of analysis and snark occasionally. Okay, let's see who we have in the live chat. Doesn't look like many, but to be expected. It is Sunday night. So we got Jaded Optimism here. Okay, Fiona is here. Philip, and so on. Let's see. North Beach Data, right. You spend your gold because you have to. It's final payment, deal done, transactions, the fiat balance shored up in the real thing. Yep. Philip says he's not being notified. Again, if you're not being notified, subscribe to Smaulgld.com and subscribe to BitChute. You do that, you will be notified. And while Smaulgld, I generally don't get the blog post up with the video and all of the charts on contemporaneously, the BitChute will be up. Right as soon as we get off this line, they'll start uploading it as well. And you'll get a notification. So you subscribe over at BitChute and you'll be notified. Instead of complaining about YouTube, do something about it. All right. Let's see. Palladium. Yeah, it's over 1,700. Doubled since March. Wow. Let's see what the price of Palladium is. 1736 right now. Gold at 1491. Silver at 1752. They're essentially flat coming off of Friday, where they didn't do that well. Cryptocurrencies, they're up a bit. Bitcoin at $55. I mean, Litecoin at $55 and Bitcoin at 8,200. What every man should have says that Bernie impression needs to be on Saturday Night Live. And that's a good thing, because Saturday Night Live is really for the 1% and the people that don't understand economics like I do. Okay, Bernie, good luck with that one. All right, it's time to get off here. Bernie, want to give the countdown? Well, you know, maybe it's not good for my heart to be doing the countdown every night, but I'll give it a try. I'll do it slow because I need to slow down the pace. So 10, no, I got to remember how to count. That's a problem. That's not a good thing. 10, 9, 8, 7. I believe that the next one is 6. Then it's 5. And then I have to, Lewis, is it 4 or 3? It's 4, Bernie. Okay, so 4. This is the countdown, Bernie. Okay, so 4, 3, 2, 1%. What comes after 1? Oh, blast off. No, 0. Oh, okay, so it's 0. Oh, have a good night. Okay, Bernie. Thank you very much. Have a good night.